Diane, why don't you first just tell us what the housing market looks like on a national basis?
Okay, on my focus is more New York, but I do have a feeling for the national. The luxury market is becoming to have more inventory than we've had in the past, but specifically in New York, we've been seeing a hesitant market, and prices are correcting. But with interest rates and purchasing power, we're going to see things better, but we're definitely in a buyer's market in New York City.
We're in a buyer's market. Meaning,
Yes.
How does that match up with luxury, having more inventory and prices coming down?
Well, when you have more inventory and prices are coming down, that's clearly a buyer's market. Great time to be a buyer in New York City.
What about the rest of the country? I keep hearing that it is a seller's market just about everywhere else.
Well, I think when you talk about first time in and more affordable apartments, that across the nation seems to be a strong seller's market still. Not a lot of inventory. But across the nation, what I'm seeing is the luxury market is where the inventory is being built. And that is starting to soften.
Luxury market meaning north of $1 million, north of $5 million. What are we talking?
Luxury, it's hard to put a price on it because it depends on where you are. Luxury in some states could be $500,000, but it's still luxury. But usually you think of it in terms of millions. Here in New York, certainly $3 million and above.
Tendayi, what do you think, just in terms of what you've seen with mortgage rates? How big of an impact is that having on the state of the economy overall, on the housing market?
Yeah, so mortgage rates are boosting activity in the housing market. Diane mentioned that things are a little bit weaker. They would be even weaker if we had higher rates. If you look at where people were thinking rates were going to be at the start of this year versus where they are now, they've definitely been supportive for activity in the market. As prices have made affordability a little bit more challenging, mortgage rates work on the other end to make it a little bit better for people who are able to buy.
What happens? What's the price sensitivity at this point? If the 10-year is below what? When do you see additional people either buying houses or refinancing?
I think any time it moves lower, some people get incentivized to buy and some people get incentivized to get a refi. But I'd say probably with the mortgage rates below 4%, so that'd probably be a 10-year around, say, 1.6, 1.7.
So anytime we fall below that's when you can really start to see activity start to pick up again?
Yeah, I think that makes it attractive for a lot more people. There's always people in the market, but lower rates help some people out.
I mean, I feel like we've had low rates for so long, and people have been refinancing and doing whatever. Is there a point where you reach saturation and everybody's already refinanced and it can't get any lower enough to entice them?
Actually, you don't, because not everybody acts optimally, right? So when you're in the financial press or the financial markets, you think, hey, there's a 50 basis points gap. Everybody's going to rush and refi today because this is the day to do it. But people are actually, they're concerned with other things going on in their lives. Not everybody has their eye on, like, what's my rate today and what's the MBA saying.
Not everybody's a market
today.
savant. It kind of trickles down to where that gets out and somebody sees their neighbor refinance and they hear about it. Exactly.
So there's always a reserve of people out there who are able to refinance.
Diane, do you think that there's really a national real estate market anymore, or are we seeing this huge divergence between the luxury sales versus middle-income sales and what you see in red states versus blue states with all of the tax changes that we went through this last time? It feels to me like it's a more diversified market in terms of where we've ever been historically.
Yeah, I think it's a little bit diversified, but it's still your home, and I think that's what people remember. It's not purely an investment, and I think you see that across the nation, that people do want some permanence in their life, and it's their home. And so I think that you're not going to see any difference.